Good day to all. Today we have learned the journal entries and some example, some of the journal. So first we must know about the journal. So journal is a book that is maintained on a daily basis for recording all the financial entries of the day. Passing the entries is called journal entry. So journal entries are passed according to the rules of debit and credit of double entry system. So basically the methods of accounting are classified under two headings. One is single entry system and then double entry system. But journal entries are passed according to the rules of debit and credit of the double entry system. So journal is a detailed account that records all the financial transaction of a business to be used for the future reconciling of accounts and the transfer of information to other official accounting records such as the general ledger. So journal is the book of primary entry or original entry. All transactions are initially recorded in the journal. The rules of the journal is such that any business transaction can be analyzed under the head of debit and credit. This is the introduction of the journal. So the next one, types of account. So to understand the golden rules of financial accounting, we must first understand the types of accounts. There are three types of accounts. First one is real account, second one is personal account, and then third one is nominal account. Whether we enter the journal to enter the journal entries, we must know having about the types of accounts. So first one, real account. Second one, personal, and then third one, nominal account. So first, a real account, it is the real account is the general ledger account relating to asset and liabilities other than people accounts. These are accounts that don't close at year end and are carried forward. These account types are related to asset or properties. They are further classified as tangible real account and tangible real intangible real accounts. So first one, what is the tangible real account? These include assets that have a physical existence and can be touched. For example, a building, cash account, furniture account, stationery account, inventory account. These are all the example of tangible accounts. This can be touchable. And then second one is intangible real account. These assets do not have any physical existence and cannot be touched. However, these can be measured in terms of money and have value. For example, goodwill, patent rights, copyrights, and then trademark, etc. These are all the intangible assets example. So next types of account is the personal account. A personal account is a general ledger account connected to all persons like individual, firms, and associations. These accounts types are related to person. These person may be natural persons like personal name account, for example, Mr. A account or Raj account, Rajesh account, Ramesh account, etc. This is the example for the natural persons and account. Like the persons can also be artificial persons like partnership firms, companies, body of corporate, or association of person also, etc. This is called personal account. So next one, nominal account. Nominal account is a general ledger account pertaining to all income, expenses, losses, and gains. These accounts types are related to income or gains and expenses or losses. For example, a rent account, expenses received account, commission received account, commission paid account, or salary account, wages account, conveyance account, or interest account. Any expenses are and income, that is called as nominal account. So these are the three types. One is uh, personal account, real account, and then nominal account. So the next one, the rules, golden rules of the accounts. This is the golden rules for the rule of making entries under double entry system can be summarized here. This is the main important golden rule. This is called the golden rule for the accounting. So first one, personal account. Second one, real account. Third one, nominal account. So personal account is the rule is that debit the receiver and then credit the given. And then real accounts have debit what comes in and credit what goes out. So nominal account have debit all expenses and losses, credit all income and gains. This is called golden rules of accounting. Personal account rule is debit the receiver, credit the giver. And real account debit what comes in, credit what goes out. And then third one nominal account debit all expenses and losses, credit all income and gains. We further slided we have to discuss in detail. So the next one, for example, personal account rules, debit the receiver and credit the giver. For example, goods sold to Suresh. In this transaction, Suresh is a personal account because it's an individual person name. So this is a personal account as being a natural person. His account will be debited in the entry as the receiver. So, for example, golden rules, goods sold to Suresh. In this transaction, Suresh is personal account as being a natural person. His account will be debited. Why the account will be debited means the Suresh is a receiver. So, Suresh's account is debit account. So, next real account example. Debit what comes into the business and credit what goes out of the business. For example, furniture purchased by an entity in cash. So debit furniture account and credit cash account. Um, so furnitures purchased by an entity in cash. So debit purchase a furniture account because debit what comes into business. So furnitures will come into the business. So we have to debit the furniture account. And credit cash account means credit what goes out of business. When the furnitures enter into the business, we have to pay the cash for it. So automatically the credit part goes out of the business. So cash account credited. The entries is here debit furniture account and credit cash account. So next is debit all the expenses and losses of the business, credit the income and gain of the business. Example entry, salary paid to employees of the entity. So salary paid to employees. Salary account will be debited because when the expenses are incurred, so the rule is debit all the expenses and losses of the business. So salary account automatically will be debited. Whereas when an entity received any interest, discount, etc., or these are credited whenever they are received by the entity. So those are all the expenses and losses paid to by the business. So that is called all comes under debit account. So those are all the income and gains received from received business that is credited. Credit they must be the credit account. So these are all the some one more example. So we have discussed in example format for the journal entry. This is the format for journal entry. The first column represents the date of the transaction. The second column, particulars column. Third one is LF. LF means ledger folio. And then fourth to fifth is debit column and then credit column. So column one represent date of transaction. Line one represent the name of account to be debited. For example, in previous example, we have to discuss here. Here the salary paid to the employees. So salary account will be debited and the cash account credit. So here automatically first line is salary account debtor to cash account creditor, isn't it? So next line 3 for the narration of transaction. So narration means every entry carry a description, a brief explanation. This is what is known as narration. So first, the transaction are recorded in the journal entries in the chronological order according to the date also. So particular column specify the account to be debited and credited. LF represent ledger folio. It represents the page number of ledger account on which we post these entries. This is called ledger folio. And then column 4 is debited. Column 5 amounts to be credited. Debit amount and credit amount represent the amount to be debited and credited to the respective accounts mentioned in the entries. So these are all the specimen format for the journal entry. So first column is date. Transaction are recorded in the journal in chronological order according to the dates. The second one is particular column. So all debit, the particular columns have debit account, credit account, and narrations. And then next column is ledger folio, LF column, and then fifth column is debit column, and then credit amount column. This is the format for journal entry. So next we have to learn the example entries of journal. So example entries, the first sum is an entity named Orange Limited has the following financial accounting transaction. The first entry is it buys goods worth rupees 50,000 from Apple Limited. This is the first entry. Again, I will repeat. It buys goods worth rupees 50,000 from Apple Limited. So the purchase account is a nominal account and the creditors account is a personal account. Applying golden rules for nominal account and personal account. In these entries, applying rule is nominal account rules and then personal account rules. Debit the expenses or losses. So credit the giver. The entry is purchase account debtor to Apple Limited account. So the debit the expenses or losses. So purchase account debtor, and then credit the giver. Who give the goods? The Apple Limited, from Apple Limited. So automatically the entry will be the to Apple Limited. The amount is 50,000. So the entries of purchase entry is purchase account debtor to Apple Limited account. So purchase account is the nominal account and Apple Limited account is the personal account. So we are applying the golden rules for personal account and the nominal account. The entries are purchase account debtor to Apple Limited. So the narration here is the buy goods worth rupees 50,000 from Apple Limited, or otherwise buying goods from Apple Limited. Both are the same. So second one is it sells goods worth rupees 35,000 to Melon Limited. So sales the goods to Melon Limited. Here the applying the rules for nominal account and the personal account also. The sale account is a nominal account and the debtors account is a personal account. In case of purchasing goods, the creditors account. In case of sale of goods, they come under the debtors account. Is a personal account. Hence, the golden rules. What is the golden rules we are applied? Debit the receiver, credit the income or gain. Automatically, the entry will be Melon Limited account debtor to sales account. So, Melon Limited means debit the receiver. Who received the goods here? Melon Limited is receiver. So, automatically, Melon Limited account debtor to sales account. So, credit the income or gain. When the sales made, the all we are receiving the income. Credit the income and the golden rules. Credit the income or gain. So we have applied the golden rules, nominal rules here to sales account. So automatically sale of goods worth rupees 35,000 to Melon Limited. The entries is Melon Limited account debtor to sales account 35,000. So we have discussed the another two entries. The next one, pays rupees 12,000 as rent. Rent is a nominal account and bank is a real account. So golden rules here, what is the rules? Debit the expenses or losses because rent paid is the expenses. Suppose the rent received means it is the credit the income. Here he clearly know about the pay. Paid means debit. So debit the expenses or loss. So next rule is real account rules. Credit what goes out of business. So credit what goes out here, we have to pay the rent means we have to give the cash for the rent. So automatically credit what goes out of this. So rent account debtor and then to bank account 12,000. It may be differ or bank or cash. It depending upon the entries, it will maybe differ. So the main concept is credit what goes out of business and debit the expenses or losses. So fourth one entry is earn rupees 3,000 as interest in bank on bank account. The interest and bank are nominal and real account. The interest is nominal account, bank or real account. The golden rules, what is debit what comes into business because interest received. So they have to receive from business. They have to enter into the business. So debit what comes into the business. Automatically credit the income or gain. So interest received is the income. So that is a credit the income. So hence the entries will be bank account debtor to interest received account. So here we have to apply nominal account and real account. Interest is the nominal account and bank is the real account. So this is the for example for the journal entries, and then so, we have to learn some more other example. Next one, example 2. Journalize the following transaction of Mrs. Radha and Sons. First one, business started with rupees, date is 1 and 2000. Business started with rupees 2,50,000. And although the same date, the entries are made and cash deposited it with bank. Rupees 1,50,000. Solution for entries is cash account debtor to capital account. Being cash brought in as capital. So there is a narration. The second one is bank account debtor to cash account. Narration is being cash deposited into bank. Both entries are made in the same date. So first entry is books of cash. Business started with rupees 2,50,000 is called as capital. So cash account debtor to capital account. Cash account is a real account. So debit what comes in. So cash will become enter into the business. So cash account debtor to capital account. The narration is being cash brought in as capital. The same date another entries are made. Cash deposited with bank. So entry is bank account debtor to cash account. So cash account is a real account, bank account is a personal account. So bank account here will be debited because of debit what comes in. So the next cash account will be credited because real account. So bank account debtor to cash account. Here cash account is the real account, bank account is a personal account. So personal, we apply the golden rules for personal account and also the real account. Personal account rule is the debit the receiver. The real account rule is the credit what goes out. So here the entries is bank account debtor to cash account. So next one is purchased machinery on credit from Rangan rupees 50,000. So machinery account debtor to Rangan account. Here Rangan account is a personal account. So credit the giver. So here the we credit the name to Rangan account. So debit machinery account debtor is the real account. So debit what comes in. We have to purchase the machinery means the machinery come into the business. So debit what comes in that is applied for the real account rule. So machinery account debtor. To Rangan account means the personal account credit the giver. So where we have to buying the machinery. So to who we have to purchase the machinery. So the Rangan account is the personal account, credit the giver. So the entry is machinery account debtor to Rangan account. So narration is being machinery bought on credit from Rangan. So next entries are bought furniture from Ramesh for cash rupees 50,000. Furniture account debtor rupees 25,000 and two cash account. Being goods, narration is being goods sold to Ramesh on credit. So for example, bought furniture from Ramesh for means furniture account debtor to cash account. So furniture account means real account, debit what comes in. So here is the furniture account. So cash account is the real account, credit what goes out. So entry is furniture account debtor to cash. So next one, bought goods for cash rupees 25,000. So bought goods means the entry is purchase account debtor to cash account. Why have we have purchase account debtor? There is a real account. So debit what comes in and then second one, to cash account. Here the rule applied for real account also. Credit what goes out. Here cash goes out. So automatically we have credit the cash to cash account. So purchase account, when we have to purchase account will be debited. Debit what comes in here, goods come in. So automatically purchase account debtor, and then to cash account. Cash account is a real account. Is the applying the rules for credit what goes out. What is goes out? Cash goes out. Isn't it? So automatically bought goods for cash entries are made. Purchase account debtor to cash account. So next entry is cash received from Yasoda rupees 10,000. So for entry as cash account debtor and then to Yasoda account. Here cash account is a real account. For example, debit what comes in. Here what comes? Cash come into the business. So automatically cash account debtor to Yasoda account. Yasoda account is a personal account, credit the giver. So automatically the rule is applied and then Yasoda account will be credited. So the entries are cash account debtor to Yasoda account. Narration are being cash received from Yasoda. And the next entries is cash paid to Ramola rupees 20,000. So cash paid to Ramola, the entries are Ramola account debtor to cash account. The narration is being cash paid to Ramola. Why here the Ramola account will be debited? It is applied the rules for personal account. Debit the receiver. Here what? Who's the receiver? Ramola received cash. So automatically Ramola account debtor to cash account. Cash account is a real account. It is a rule applied for credit what goes out. Here what goes out means cash goes out. So automatically cash account credited. So Ramolo account debtor to cash account. Ramolo account debtor means rule applied for debit the receiver. Cash account crediting the rule for applying credit what goes out. So automatically the entries will be Ramola account debtor to cash account being cash paid to Ramola. That is the narration. So last entries is cash withdrawn. So the next one is cash withdraw from bank 50,000. The entries are cash account debtor to bank. Withdraw cash from bank. The cash account rule is real account rule. Debit what comes in. So here what comes in? Cash comes in the business. So automatically cash account debited and then bank account credited. Why bank account credited means that is a personal account. Rules for personal account is credit the giver. So automatically bank account will be credited. So cash withdrawn from bank 50,000. The entries are cash account debtor to bank account. Cash account is the real account. Bank account is the personal account. Real account rule is what debit what comes in. So cash account debit. Personal account rule credit the giver who give the amount. Bank give the amount. So automatically bank account is credited. So narration is being cash withdrawn from bank. These are all the example of journal entries. Today we have learned what is a journal format and then journal entry, golden rules of accounting, then how to post the journal entries. Thank you, students.